Everyone is wrong about the secret to lasting wealth. Watch the strategy that quietly multiplies money over decades. Welcome to Money Clarity Hub. Most people think building wealth is about picking the right stock or buying the next big crypto, but the truth is simpler and more powerful. Wealth usually grows from having a clear financial strategy. Without a plan, even high-income or lucky investments can disappear surprisingly fast. A strategy acts like a roadmap for your money, helping you decide where to invest, how much risk to take, and when to adjust course. Instead of reacting emotionally to market headlines or price swings, you move with intention. That shift alone can dramatically increase your chances of building lasting wealth that supports your life for decades. A financial strategy begins with understanding what wealth actually means for you. For some people, it means financial independence by age 50. For others, it means security for their family, a comfortable retirement, or freedom to pursue passions without worrying about money. Your goals determine how your strategy should look. Write them down clearly: how much money you want when you want it, and what lifestyle it should support. Once your goals become specific, your financial decisions start making more sense. Every investment, saving habit, and spending choice can then be evaluated based on whether it moves you closer to those goals. The next step is building a strong financial foundation. Before chasing returns, make sure your basics are solid. This means eliminating high-interest debt, building an emergency fund, and creating a consistent saving habit. Many investors ignore these fundamentals because they seem boring compared to exciting market opportunities. But stability is what protects your wealth during unexpected events like job loss, medical expenses, or market crashes. Think of this stage as building the base of a financial pyramid. Without a strong base, the entire structure becomes unstable. With it, your investments can grow without constant financial stress undermining your progress. After the foundation is set, your strategy should focus on long-term investing rather than short-term speculation. Markets will rise and fall constantly, and reacting emotionally often leads to poor decisions. A successful strategy emphasizes consistency instead of timing perfection. Regular investing through dollar-cost averaging helps smooth out volatility over time. When markets drop, you buy assets at lower prices. When markets rise, your existing investments grow. This disciplined approach reduces stress and removes the need to predict every market move. Over years and decades, consistency often beats clever predictions and lucky trades. Diversification is another essential pillar of financial longevity. Placing all your money into one asset or one market might deliver impressive gains during good times, but it also exposes you to severe losses if that asset collapses. A smart financial strategy spreads risk across different investments such as stocks, bonds, real estate, and sometimes alternative assets. Even within the stock market, diversification across industries and regions helps protect against unexpected shocks. Think of diversification as financial shock absorbers. It may not maximize gains in every moment, but it dramatically reduces the chance that one bad decision destroys years of progress. Understanding risk is equally important for building a strategy that lasts. Risk is not simply about volatility or temporary price changes. Real risk is the possibility of losing money permanently or failing to meet your long-term financial goals.
No money structure means financial chaos. Arrange your money for control, stability, and long-term growth with Money Decision Filter. Link in the description.
Younger investors often tolerate higher volatility because they have time to recover from market downturns. As you move closer to retirement or financial independence, protecting capital becomes more important. Your strategy should gradually evolve with your life stage. Adjusting risk over time ensures that early growth opportunities do not later transform into unnecessary financial danger. Another overlooked element of wealth longevity is controlling lifestyle inflation. As income increases, it becomes tempting to upgrade every aspect of life: bigger homes, luxury purchases, expensive habits. While enjoying success is perfectly reasonable, uncontrolled lifestyle inflation can quietly sabotage long-term wealth. The key is balance. Allow your lifestyle to improve gradually while maintaining a strong savings and investment rate. Many financially successful individuals follow a simple rule: every income increase gets partially invested before spending rises. This habit ensures that higher earnings consistently strengthen your financial future instead of simply increasing daily expenses. Taxes are another powerful factor that shapes the longevity of your wealth. Many investors focus entirely on investment returns while ignoring tax efficiency. Yet taxes can quietly erode a large portion of your gains over time. A well-designed strategy considers tax-advantaged accounts, long-term investment horizons, and efficient asset placement. Holding investments longer often reduces tax burdens and increases compounding benefits. Some assets perform better in retirement accounts, while others are more suitable for taxable portfolios. Thinking about taxes early helps your strategy preserve more of the wealth you work so hard to build. Automation can dramatically improve the success of your financial strategy. When saving and investing depend entirely on discipline, it becomes easy to skip contributions during busy or emotional periods. Automated systems remove that friction. Automatic transfers into investment accounts ensure that money is invested consistently regardless of daily distractions or market noise. Over time, this habit compounds into significant wealth. Automation also reduces the temptation to time markets or spend funds impulsively. By treating investing like a recurring bill that must always be paid, your strategy becomes stronger and far more reliable. Monitoring your strategy is important, but constant adjustments are usually unnecessary. Many investors check their portfolios daily and react to every headline. This behavior often leads to emotional decisions that undermine long-term success. A better approach is periodic review. Once or twice a year, evaluate whether your portfolio still aligns with your goals, risk tolerance, and life circumstances. Rebalancing your investments may be necessary to maintain diversification, but outside those scheduled reviews, resist the urge to constantly intervene. Wealth often grows best when your strategy is allowed to work quietly over time. Education also plays a crucial role in maintaining financial longevity. Markets evolve, new technologies appear, and economic conditions change. Staying informed helps you adapt intelligently without abandoning your core strategy. This does not require becoming a full-time financial expert. Reading reliable financial material, listening to thoughtful analysis, and understanding basic economic trends is often enough. The goal is to remain aware while avoiding hype-driven decisions. Financial education acts as a protective shield. It allows you to recognize opportunities, avoid common traps, and remain confident during periods of uncertainty. Patience may be the most underrated component of wealth building. The most powerful force in investing is compounding, but compounding requires time. Early progress can feel slow and even discouraging. Yet as years pass, growth accelerates dramatically. Investors who remain disciplined during this quiet accumulation phase often experience remarkable results later. Patience also protects you from chasing every new trend or abandoning your strategy after temporary setbacks. Remember that most legendary investors achieved success not through constant activity, but through long-term commitment to well-designed strategies. Ultimately, creating a financial strategy that ensures wealth and longevity is about clarity, discipline, and consistency. You define your goals, build a strong financial base, invest regularly, diversify wisely, control lifestyle inflation, manage taxes, automate contributions, and review progress periodically. None of these steps require extraordinary intelligence or secret insider knowledge. What they require is commitment. When these elements work together, your money stops drifting aimlessly and begins moving with purpose. Over time, that purposeful movement can transform ordinary financial decisions into lasting wealth and genuine financial freedom. Thanks for watching Money Clarity Hub. Keep your mind clear and your money growing. Subscribe for more practical insights every week and check my video playlists for more clarity and growth.